Heat on my skin, he's watching close. Baseline crawling under my clothes. The air gets thick, I taste the smoke when looking. Every rule just broke. Finger on my wrist, pulse in sync. He whispers slow, I don't need to think. He says you move like you own the night. I smile, baby, maybe right. The room starts spinning, I can't breathe. Every eye on me, feel it rise beneath my skin. Let the moment pull me in. Hold me closer, don't blink now. We're just seconds from the sound. Control me tonight. Control me tonight. Shots on the bar, he hands me one. I taste the burn, the night's begun. Body to body, no space to think. The sweat, the lights, the glasses clink. He leans in close, you drive me wild. I say I'm danger when I smile. The beat comes back, I lift my hands, and every word's a new command. Heart's on fire, I can feel the spark. You pull me deeper in the dark. Hold the breath before it breaks. All I want's the sound it makes. Yeah, build me up now. Take me to the edge.
Hello everyone, ladies and gentlemen, welcome back once again to The Matrix. Right, today's theme is a little controversial, but once again, you're welcome to Tony Trade's channel. And today we're going deep. We are going so deep today, and if you're around tuning in live, move to the comments and put a plus right where you're from, show us your... Today's theme is momentum matrix. So we're going to crack market energy flows, and I'm going to teach you how to ride moves before they happen. That is what you have to learn from today's video. So if you've ever entered a move too early, all right? If you've entered a move very early, you've watched price hesitate, prices faked you out, then from nowhere it just blasts in your direction, okay? The second you step out, this session is for you, all right? If you're tired of this market games, you're tired of blowing accounts, blowing money, you just don't understand what's going on. You buy, price goes down. You sell, price goes up. This session is for you, because what we're doing here is we are decoding to this invincible side of the market, okay? How energy builds. How does energy build up before a breakout? You hear all these kinds of terminologies about liquidity traps. So how do liquidity traps form? And how can you learn to feel a move before it happens? This is for those advanced people that don't even use indicators. They say they have an intuitive skill, a capability that they've got over the years, right? So today's about the rhythm, all right? Speed without chaos, remember that. Vision without fear. And of course, that's what separates a clicker from a trader, because everyone can come and click buy, others can click sell. But what really separates and differentiates a professional from a newbie, well, it has a lot to do with experience and a little bit of try lots of practice, lots of years, lots of hours charting and so forth. So this is a quick gift for you before we start. Pocket option promo code Tony Trade 2 Tony Trades 100 will give you 100% bonus on your first deposit. And of course, I will drop another code at the end for those that stay locked in. So hit the like button, subscribe, and let's gear up. Now, before we start, allow me to take you back to the economic calendar. We have live streams every Friday, and last Friday we had employment change from the Canadian dollar. And I taught you how to read that, how to read the fundamental side, what are some of the tricks, the gems, that I've been using over time. This week was a little slow, but for my community, we've banged a lot of profit. My community is really happy. Those of you that are subscribed and follow up. We had Tuesday, we had the Fed Chair Paul spoke, and we've had the Bank of England Government Bailey speaking. On Wednesday, besides the OC, we had nothing much. Thursday, we had same OC, employment change, unemployment rate, and GDP for the GBP. Today, we don't have so much, so I've decided to take you through a momentum matrix. And before we dive into these charts, please drop your country flag in the chart. I'd like to see where you are all tuning in from. We have any people live? There's a chart. So I want to see where you guys are coming in from. I want to see where the matrix is tuning in from today. Shout out to all traders in the UK. Some of you have been writing to me privately. Africa, Asia, people in Middle East, Russia, wherever you are right now, this session is for you. You can also join in towards the end. If you have any questions, there'll be a Q&A, but feel free to drop a comment, some of your questions in the comments, right? Now, today, we are not chasing any signals here, right? We are just building a mindset. Okay, we are building a mindset. This is the most crucial psychological barrier that many novice traders face. Your mindset, all right? A trader's lens that sees what others ignore, all right? What do I see different from this chart? Many of you, let me remove this ATR because it doesn't make sense. Lens that sees what others ignore. So if you're very serious about improving your read, stay till the end. I've got something very special. Read, stay till the end. I've got something very special for you. And that is my momentum trigger checklist. All right, it's a free download, a real tool for real setups. Okay, so a quick summary of what I've prepared for you. We'll be looking at how to understand how momentum energy forms in the market. These are terminologies that we use in our daily life, but if you transmute them to a chart, what does momentum energy form? How does it form in the market? Then we'll move to a live chart analysis on pocket options, of course. I like to trade gold on Friday because it's the only decent volatile asset in the metal list. And also we'll look at some major pairs. So I'll also show you how to read volume and candle pressure. You see, timing is very important to catch any ignition of any bear or bull market. Then we'll talk about fakeouts, delayed reactions, and psychological control. Finally, you'll be given a bonus checklist and community links to keep learning. So stick with me, buckle up, get your notes ready. If, you got a coffee there, let's start decoding momentum. And of course, if you're busy, you can always come and check the live recording because I keep this on my channel. So we're going to start with energy flow concept, all right? An energy flow concept. Now, I like to look at this as how traders think of it as speed. When you talk about momentum, just like in physics, it's something to do with speed. A candle flying across the chart. So you can see for yourself that some candles are longer than the others. Now, I want to make this very clear that in institutional trading, we don't use this kind of mumble jumble, right? I like to call that chaos. We actually don't trade this, but on a retail level, there's still some opportunity. And because some of these instruments and softwares are not available for the public, we just stick to charts, all right? And that is why over 95% of all traders lose in the market, because they are literally going against the river stream. You're working against some of the smartest minds in the world. You're working against artificial intelligence. Your speed is very slow. Your computers that you're using, your servers, the latency, the vol. I mean, it's a hell of traps out there. It's a landmine. So for now, if you're a retail trader, just come and listen. So if you see a candle flying across the chart, you could say this is pretty much a lot of energy in there. So it kind of feels like a lot of energy has been building, and then somewhere it just breaks out, right? But in reality, momentum starts long before this explosion. So I want to just, let's see. I want to highlight this, right? So we have this zone right here. We have this zone here. So right before this move, you could see on the hourly, you could see a build up right here, right? A build up of momentum. So it starts long before the explosion. It starts in what I like to call energy flow cycle. All right. So there are three distinct phases you must master. Many of you have different kind of names for them. And as we've looked before in some of my videos where I broke down the 4 stages, in this one, I'm going to break down the 3 market phases to master in energy flow cycles. So the first one is a build up. We'll break that down. We'll have a breakout, and we also have okay. One moment. Okay, if you cannot listen, if you cannot hear, please comment in the sections. All right. Many of you are saying you cannot listen. Can you listen? Please put a tick right now. Please put a tick right now if you can hear. Okay, we're good to go. Wonderful. All right, now that everyone can hear, so we have a build up, all right? We have a breakout, and then we have a barn. A build up, a breakout, and then we have a barn. Now, this is the quiet place, the build up. Let's look at the build up. I will be drawing my horizontal rectangles to some kind of build ups here. So if you open any chart, any time frame, you're going to see a build up. You are going to notice that there is a build up. Now the build up that I've highlighted is rectangular. This is a quiet part, right? It consists of small candles, some kind of consolidation. There's not really much direction. You know, you don't have a clear understanding of whether price is going up or price is coming down. Also, most traders get very bored in this stage. They get bored and they leave. But that's where the big players are. All right, big players are loading orders. Every week that you see here, every week, every fake low, all right, we have some liquidity being collected, right? And this can take months, weeks, days, depending on the asset and on the template that the traders, the interbank range traders are using, depending on the asset class. So if you look very closely, you'll notice equal highs or equal lows forming. A, B, C, D, A, B, C, D, right? That's not a coincidence. It's a liquidity trap. Now, the market wants traders to commit early so it can collect your stops later. That is what the market does. It keeps collecting your orders, and then we have a breakout. Now the breakout, I will show you this with let's see. we got some other instruments here. Okay. Right. So with this horizontal line right there, I will open up a new rectangle. Let's make it red. So this rectangle here is the kind of breakout. All right, we get a breakout right there. Now once the energy builds, the market ignites, we have a breakout. This is your big candle. It's like a spike. All right, it spikes out your surge, volume jumps. You can actually put a volume indicator. You could use any indicator out there. However, don't forget indicators lag and you don't want to waste a lot of time on them. However, just check out my YouTube channel and you'll be able to see all the indicators that I've used and that I use. All right, let's just go with a MACD there. And you could see the surge in volume. You could see the crisscrossing of those lines. So that just makes a lot of sense. When volume jumps, emotions spike, you know, everyone rushes in, and that's not how you do it. But the key is here. Your job isn't to chase any candle here, right? Your job is to recognize that ignition early while others are still doubting. So you cannot really enter this move right here. You have to have had some kind of background history of your asset class, and it's very important to stick to a few of them so that you learn them, you can feel their pulse, and that is how you accumulate years and time of knowledge and confidence, right? So once you recognize the ignition early while others are still doubting, that's when you end. Now we have the third stage, which is the burn. This is the emotional trap. We have late buyers rushing in, right? And it is right here. I'm going to make another rectangle and I'm going to color it, say, pink. All right, so we have a burn here. People like faked out again, and then you get that. Now we have all kinds of late buyers rushing in. However, smart money is exiting quietly. Now this is on a micro level, right? If you open up the daily, you'll see it totally different, or even a full hour. It keeps getting diluted. So if we move back to 15, if you move back to 15, let's see it on a 15. Let's see it on a 15. Okay, we got an hour. Okay. Oh, there we have it. Right. So I've extrapolated this on the 1 hour, and you can see for yourself that volume drops. The volume dropped. It dropped around this corner. We have red candles there, and late buyers rushing in, money exiting, volume drops, speed slows, and the move loses energy. So if you can recognize the burn phase early, all right, you can actually save profits or even flip your position. So if you're going long, you just go, you flip and go short. So that is what happens if you recognize the burn phase early. All right, so I asked myself a question. Is momentum, is it random? I think that momentum, actually I don't think, it isn't random. It's a sequence. It's energy accumulating, all right, as you can see. And then we have breaking and then fading. Your age as a trader comes from recognizing which phase of the market is currently transpiring. So if this makes a lot of sense so far, I haven't done anything serious now. It's just, you know, going through some of my simple understandings and trying to articulate what I see in the market. So if you are around this far, drop any smiley out there, drop a plus in the chart. I want to see who's feeling my energy. Okay, so how to read energy on a chart? How do you read energy? Let's translate all this theory into some kind of visuals that I've just done. How do we see this energy? How do we read it? You need 3 tools, okay? The first tool is you need some structure. You need to identify those 3 phases. You need volume and you need candle pressure. Candle pressure is very important. What does structure do? Structure like this rectangle here, it tells you where the energy is hiding. It should make sense if you're a trader. You know, sometimes you go into a room and you could tell who has had a bad day, who's having a good day, just by those micro mannerisms, those facial expressions. So just like in real life, in the chat, you can also tell the same thing. Instinctively, as you start to trade and practice over time, you'll realize how structure can tell where the energy is hiding. You'll see tight ranges, you'll see triangles, you'll see some compression zones. So if price is making smaller highs and higher lows, the range is tightening, just like here. It keeps slowing down and then it tightens, all right? That's potential ignition. All right, now volume. Volume tells you when energy is awake. During a build-up, as you can see, this build-up, I will draw 2 vertical lines, so you could see where I'm coming from. So right here is some kind of compression, right? Now during a build-up, volume is very low. This volume right here, as you can see, is very low and consistent. That is key. If the lows and the highs are sort of prematurely coming in and out of that zone, and you look at the volume for the past couple of minutes, hours, whatever time frame you're using, and you see the consistency, then you can know that, that we are in stage 1. When you suddenly see a burst of volume with no clear direction, right? You see a burst of volume, that's a pre-breakout pressure. We call that pre-breakout pressure. And the volume also changes. It happens every day, anywhere, anytime. Now, candle pressure. What do I mean by this? I mean the candle size, as simple as that. Candle size. And you can measure this with an ATR, the average true daily range. Let's see, we have an average true range. So every instrument has a particular set time range. And also don't forget to get the true ranges. This is if you're getting deeper and deeper into analysis. You could always check that out on bar chart. This is a free website that can actually show you the exact highs and lows of any market out there. So you could just go over here, all right, and look for the highs and lows. And just like that, you could look for your instrument, chart that out, place the highs and the lows, and then you can move along with that. Now, long wicks in both directions, that is confusion. Small bodies stacking one way, that's some kind of commitment, right? We have commitment from traders. The candle expansions with no retrace, that is ignition. So there are 3. If you have longer wicks, for example, you have longer wicks in both directions, all right? Just like this. We have a wick up, these wicks in both directions, that is just confusing you. And if you have small bodies stacking one by one, all right? That is commitment. Small bodies stacking one by one, we're committing. If a candle is expanding with no retrace, that is ignition, and that is right here. We have an ignition to the downside. So structure gives us it gives us a stage, it gives us some volume, it gives us the soundtrack, the melody, and candle pressure gives the emotion. So you combine them and you're reading the language of the market. Welcome to the markets, guys. It never gets more interesting than this. So there are many other gems that I'll be sharing with you in the next live streams. If you join my channel, I always share a mindset growth, what you're supposed to do with the markets, in the markets, and off the markets. All right, now the charts are live. Right now I'm looking at gold. Let us go to gold. Now, where is gold? There you have it. So we're looking at gold and we are in the breakout stage. Immediately that is visible. On the 1 hour, we are on the breakout stage and we are tapping into previous lows. We have some support over there. I'd like to check out what is happening on the 5 minute. On the 5 minute. Now, don't forget today's a Friday. You want to take it slow. Always preserve your capital, manage your risk. That is number one. You know, this is the most important and crucial part of trading. You have to preserve your capital in order to stay longer. Now, notice what's happening right now. You see, after a real downtrend, we're having some support and we are seeing compression. Compression in this little baby triangle right here. We are seeing some compression where prior to New York session is coming in, probably we'll get some volatility. And if you just look at the daily, daily doesn't look really nice. All right, but nevertheless, on the 5 minute, we have some compression just below the previous low. So that is your build-up phase. The market is loading orders under resistance. So there's some kind of resistance here. Okay, resistance. We have, say, the 1 hour. There you have it. And surely we have some resistance on the micro level. Now, it'll be very, very interesting to see how that forms. Now, I might go in, but I want to go through a few more things here. You see those echo highs, that's liquidity. Traders are selling here, right? Now, traders have been selling, all right? Stops below here. When price takes out these lows with volume ignition, that is when you probably have to be very concerned. Okay. Wonderful. Now, watch this, all right? Do you notice volume? If I bring in my indicator with volume, let's just use a MACD. It has some volume there. If I bring out my indicator right there, you could see the correlation. The average true range is way below normal on the 5 minute. If I check out the 1 hour, it's pretty decent. So it's in the middle. It's at equilibrium. So we might not get a lot, right? Get a lot of downside. Now, having that at the back of your mind. By the way, don't forget that I'm explaining to you this with a hell of history behind some of these charts. If you've been following my channel, you have to understand that we are not blindly trading. We have fundamentals at the back of our mind. We have sentimental analysis, technicals. Your heat maps must be in place. For example, there's a seasonal tendency here. You have to assimilate and analyze these particular instrument that you're going in. All right, and don't forget the commitment of traders report. That is just a report showing how traders all over the world are positioning themselves. We have commercials. I've gone through this. We have the non-commercials. These are large companies. Just the commercials are the large companies that are just managing risk. We have the non-commercials. These are large speculators like hedge funds and some of the large retail traders out there. And you wanna monitor that as well, depending on your asset class. Now back to our trading here. With all that at the back of your mind, you've gone through the pitfalls. You see, if you're reading this with that kind of mindset, then you have an edge. you are well balanced, you're in harmony, you're not rushing, you are trading from an informed position. All right, if you are reading this live or checking or tuning in with me, you'd already sense the energy building here, right? There is some energy. There should be some energy here. Now, price is trying to move back. You have to keep playing around with that. And here's a tip, all right? This is one tip for you. The market will often give you a fake deep before the real breakout. We've identified we have a breakout, A, B, C, D, E, F, G, H. So the market will often give you a fake deep before the real breakout. If it wants to trap breakout traders before the move, if you see that deep with a long wick and then volume right here corresponds and it busts, that's a strong clue. Ignition is next. All right. So we're waiting for it to pass that last one. If it gives us a week, we just take the opposite. All right. So we'll just have to wait for the 1 minute. And there you have it, guys. We having. Okay. Now, next up is your risk. You want to come and you want to switch that to risk. Now, you want to risk not more than 1%, okay? 1% for a trade. You could break it down into 4 mini trades, and that will be about $350 that I will be risking. I'm going to look at the 15-second, all right? Now, from just experience, I already know this could be a breakout, a following momentum on the daily. However, my daily is a little bit spoiled, and we could see this area being reached. However, it's a Friday, and there you have it. We have the fake, so we go in with a buy. We had that week just as explained previously. All right, we had that week. You have all the background information. We enter the trade with confidence, with strong confidence, and we lock in $644 US. All right, guys, this is how you do it. And of course, you could keep going on and on and on and on. However, you want to pay attention to the rate of speed. How does speed move from these zones? Is it, you see that explosive move right there? You could increase your time to maybe 30 seconds. But I'm very comfortable with the result. We've had an 84% of the 1%, all right? So we've risked $350 to get over $600 US. And you kind of get the idea. Now this is all live, and we haven't even yet started because New York session is right around the corner. The explosive move is coming back, and it traps people out again. And the cycle continues. Now, it's very important not to be trapped going into a weekend, right? It's very important to secure your bag and always ensure that you are ahead of the curve. Wonderful. Now, we are doing very well today. We've had our live stream session trade closing in a profit. I use pocket options again. When I'm using pocket options, timing is your biggest ally. I don't know why people actually trade without these short time frames. If you ever think of trading under, say, a minute, under an hour, you need to have a contingency plan whereby if you're trapped, you have your risk management on the side. Oh, and by the way, I have a full detailed template for you using the martingale strategy. I update that on my private chart. You want to check that out and take advantage of every tool that I'm pushing out there. So you're not just picking out any direction, you're aligning your expiry with momentum ignition, and that is key. Using pocket options, I always align my risk with the momentum. And how do I do that? I just simply use expiration time. So that is why reading the cycle matters, guys. You know, when you read the cycle, it's much better than being right. You don't have to be right. All right. This has been proven. You can actually have a 70% losing streak and still be profitable. All right. So you have the correct bias and you still lose if your timing is wrong. So build up, remember, build up, ignition, and then burn. Learn to catch the ignition, avoid the burn, and of course ignore the noise. Okay. So we have psychology already being taught. We have fake outs and control. Let's talk about what really breaks traders' psychology during fast moves. If you've noticed, I have a detachment strategy as well. I've gone in, I made my profit, and I've gone out. All right. You will learn the hard way if you don't have strict rules when you're trading. Don't forget, the market is not your friend. It's not your sister, your mother. It's here to take your money. And money comes from novice traders the uninformed traders coming all the way into the informed. So we literally rinse and repeat. And there's no other better way to jump into a community full of professionals who can guide you and direct you in the right way. Now, let's talk about what really breaks trader psychology. The market knows your instincts. It does know. It uses speed to manipulate emotion. When price starts to accelerate, all right, anywhere you see price accelerating, on a 5-minute, for example, if price accelerates from a place, you either feel FOMO or fear. And both of these destroy your clarity. Okay? Fake outs aren't bad. These fake outs that you see, they're not bad, honestly. They're just tests. They're created to clean liquidity before the real push. So smart traders wait for confirmation of commitment, not the fast reaction. And as you've seen, I've waited patiently. All right, I had my rules and I entered. Doesn't matter what strategy you're using. The mindset is key. Okay, so that has been an example. We had the fake breakout below support. Everyone buys. Fake out below resistance. Apologies. Everyone buys, and then volume disappears. Price collapses. Liquidity collected. Now you see it's coming back. It is coming back. This is an indicator that we are still collecting. Yes, we are still collecting. Looking at the time for New York session. Now, 2 candles later, it rallies again over here. You see, this is how professionals build entries from retail mistakes. So we had this trap here and price is going up. We had that test, it goes back up, and so forth. Now, sometimes momentum builds, all right? It fakes you out. Okay? And then it takes off 10 to 20 minutes later. That is called a delayed ignition. And you usually see that on the GBP USD. A very nice pair for that. A lot of that happens all the time. After 10, 20 minutes, this is why it's key to understand your pair, because you'll have an idea of, say, after a fundamental release, it usually takes about 15 or 20 minutes, and the back end guys from the middlemen, they have reduced their slippages and so forth. So that delayed in ignition, your patience pays more than your entry speed. So if you can learn to wait for rhythm, you stop forcing trades. Every move has a tempo. Your goal is to get in sync. Do not chase anything, guys. Please do not chase anything. We've had a live trade, live breakdown. When you see a big candle, your brain says, let's go in. But a pro sees where it started. Try to go back test, all right? And ask yourself, where did it start? Why did it start? And what phase are you in? Control comes from context. The context is key. It's not the live trading. If you understand the phase, the emotion, it just can't trick you. So every time you're going in, ask yourself, which phase are you in? Speed without chaos, vision without fear. That's the whole psychology behind a momentum matrix. That is it, guys. That is it. That is that is in short. Now, we teach a lot of this in my pro group. Just join, ask me questions. The best way to learn these things is to try. You try, you practice, you test, you fail, you ask again until you get it. All right, traders, we've covered a lot today. It's been a short one, but fully packed with gems and lots of insight. Let's recap before we wrap, all right? Today we've learned three things. We've learned the three phases of market energy: the build-up, the breakout, and the burn. How to read structure, how to read volume, and candle pressure. How to identify fakeouts and delayed reactions. How do you control your psychology in a fast-trending market? This is how you feel the market instead of guessing it. Stop guessing, all right? Stop guessing this stuff. You don't need to keep losing your money. Stop gambling. And of course, as promised, that is your other promo code. It's the same. You could use that to get 100% bonus on your fast deposit. I will send the momentum trigger checklist PDF in my group chat channel, so check it out. It's ready. It summarizes today's methods step by step. Just download the link in the description and the pin in the chart. Now, if you want to keep going, join my free Telegram group. The link is in the description as well. We break down setups, mistakes, and mindset every day, every week. Follow me on Instagram, guys. I share daily market flows, behind the scenes prep, and trader psychology. If you're watching this later, of course, drop a comment with your biggest takeaway. I will respond personally. If that is too hard for you, then you could just join my community and ask me directly, all right? Remember, the market is in chaos. It's rhythm. When you learn to feel the rhythm, you stop chasing and you start flowing. Thank you, guys, and see you in the next video, next session. Cheers, and see you.